Hi, what's up, guys? Today we will talk about what is an investment strategy. Okay, let's go. This is a clear plan of your action. One of the stock exchange. It must take into account for what purpose and for what time you want to invest money. As often you stand to make deals to which you will navigation in our decision and also on which profits are counted or and with what damages are ready to accept. The strategy will help you draw up a detailed investment portfolio, avoid repeat decision, and therefore reduce the likelihood of losses. Investments are always associated with risk to lose money, but if you act just at the call of the heart or one on the advice of friend, it will only complications the situation. Therefore, you need to stick to a clear plan. At the same time, you should not forget to receive it. For example, when the situation on the market changes very much, decide to answer a few questions to yourself. Why do you want to invest? How ready to invest? And when you need money? One with the help of investment want to accumulate on the car or other expense to pay for children and sound plans to secure a comfortable old age. Goals like investment portfolio, you may have several long-term investment allow you to get a tax education. Set the term it you need money by the term of the strategy are long term. You are looking forward to return investment, not yearly. That is 3 years medium term. You are ready to invest to the period from year to three. Short term, you plan to pick up money from the stock market for less than a year or than may need you at any time. The long-term strategy allows you to choose almost any tools with different levels of risk and expanded income. For example, bonds or shares of closed mutual investment funds, mutual with a maturity of 10 years and more, the yield of which sometimes is particularly high. Attachment in present metals are searchable, their prices are highly structured and for the year or two may fall. But on long distance, these, as a rule, are ahead of inflation and serves in speculation approbation assets during periods of global instability of financial market. When you are playing, it is especially important to distribute the investment between various campaigns, industries, and types of securities of diverse investments. So you will make the composition of your portfolio balanced and reduce the risks. Julia took her daughter to the first class and thought that after 11 years it may be necessary to pay for money to pay to school at the university. Julia has stable work and part of their income the cloud direct on investment. If still decides on it, she is suitable for a long-term strategy. The medium-term strategy has a slightly less toolkit but still quite large. You can choose assets that levels and fluctuation in price, but on the horizon 1 for 3 years, they usually make a profit. For example, the traders or reliable campaigns that regularly pay dividends, federal loan bonds, or reliable corporate bonds, exchanges of exchange open or interval mutual funds. Ivan Nikolaevich, head of Yulia, after 3 years is going to retire. For him, the medium-term strategy is ideal to protect the saving from inflation and ensure and additional income when is not longer working. In the case of a medium-term and long-term strategy, there is no need to constantly track the calculation. It is enough to keep track of the situation in the markets as a whole and periodically correct the composition of your portfolio. With long-term investment, you can get an education income if you use an individual investment account. Do not remove money from him for 3 years, and in addition to arrivals from investment will be able to get an investment tax deduction if you may soon need money. Choose a short-term strategy. You will only suit liquid assets that is chose that can be sold at any time. For example, freely traded in stock exchanges, bonds, pairs of open and stock effects. Artem has a good salary. There is no family yet, and yacht-free money he plays on the stock exchanges. From him, the stock markets is rather hobbies and entertainment. He has no far goals, but in winter, in the summer, he goes on vacation and tries to earn money by investment. By this time, it adheres to a short-term strategy. The profitable of short-term investment is much more dependent on temporary fluctuation in quality of your assets than in the case of long-term investment. If you're a mind at getting quick profit, you should be ready for serious losses. Any investments requires control. Rate how much time plan to spend on investment if you are not ready to constantly track changes in financial market rate. News and study the reporting of campaigns. Your option is a passive strategy is not optimal with long-term and medium-term investment. In this case, you do not need to pay a lot of time to analyze the current situation. However, with a passive approach, it is possible to simply collect a portfolio and forget about it. Any investments require control. From time to time, you need to evaluate your assets and take risk in necessary object work. Yulia spends a lot of time in classes with a child. She is ready to become an investor, but she has no time to follow the stock market. Therefore, she is suitable for a passive strategy. Investors who are ready to respond quickly to news and trade laterally daily use and active strategies. They chose tools that can rise maximum income and constantly track the best time for shopping and sales. Active strategy allows you to get big profit, but is so connected with highest risk. The success of such a strategy depends on how correctly you assess the situation in the market. When you need to keep in mind that active investors have to pay more compensation for the operation brokers and stock exchange that passive. Okay, that's all. Goodbye.